Yeah, good morning, everyone. So yesterday we saw sharp sell-off in the Nasdaq, mainly driven by Nvidia and companies which are in AI-driven chip manufacturing and data centers. Uh, Mainly, the reason was the new innovations which has come up, which is putting a lot of cost, which was going in manufacturings of AI chip and all to a question mark, where DeepSeek, one of the Chinese startup, has come up with very low cost model, and that has gaining prominence in the market, and this can be a disruptive thing which is likely to change the structure of AI in the world. So this has put a question mark on Nvidia uh, high growth which has happened in last uh, year. Stock came off by almost around 17%. So what we see that this DeepSeek, what is coming, can be a have a limited negative impact on selected stocks or selected sector, which is one is that the processing time which is being taken for by the AI driven programs are reduced, and there could be less processing chips which may be required, and also there will not be any great requirement of data centers which require a lot of powers and all. So the power consumption will also come down. So if we see the in the US, a lot of companies which are talking about increasing power supply to data center, those stocks has also come off. So this is likely to have a limited impact on these things, but uh, other companies may not have any great impact or maybe even positively impacted with this disruption, as new technology will require less, it will be cost effective and much faster. So overall seems like limited to few stocks and sector, and the other things will remain more of a normal and can be even beneficial. Indian IT company may not be having any impact or direct impact of this. Though AI in a longer run can have some impact on the total employability of the sector. But short term, we don't see any impact of DeepSeek on the Indian IT companies. Uh, we had seen today morning more of a US market is stable. Asian market are indicating more of a flattish or marginal up or marginal down, mixed bag indications. But decline and increase is also not very sharp. It's all within 0.5%. Uh, this is mainly because the dollar index, which was coming off from a level of 110 to yesterday, even it touched below 107, but later it bounced back, and it's now at around 107.9. This was mainly because of appointment of Treasury Secretary in the US, and which has indicated that the universal tariff will be starting at 2.5%, will be imposed by the US, indicating that all the goods which are coming into US will have some tariff, uh, and starting from 2.5% and can gradually move up. So that has again created some fear about tariff which is coming in the Trump regime, and we are seeing the dollar index moving up. So that is bit acting negative for the world market. Apart from that, yesterday RBI has taken some measures to ease the liquidity. The banking system is running at almost around 3 lakh crore negative liquidity. And to cover up that, RBI has come up with 2, 3 measures wherein they will be buying bond, and infusing liquidity, and also will be playing in the currency market. So all these things will have some breather for liquidity, but still we are very short on liquidity. So need to do more by the RBI in coming period. Maybe RBI might have to cut CRR again in February meeting. So overall, seems like we had seen yesterday very sharp corrections in the market, and some respite can come in today's trade with uh, whatever the yesterday fall which has happened because of uncertainties. Now we should see some bounce back in today's trade. Now I'll request technical team to take up from here.
Yes, thank you, sir. Good morning, Madhukar. This is Swati. Today, the market is likely to open with a little bit gap up opening, and we're likely to be sideways momentum during the day. Yesterday, we have seen a sharp fall, almost 0.15% on the closing basis, which gives some sort of a cautious sign on the technical front. But since after such kind of a fall, we might witness some sort of a bounce back rally in the today's trade. On the technical front, as of now, the resistance for today intraday purpose is placed at around 22,900. Any move above that level will see the extension of this bounce back rally towards 22,970 to 23,040 levels on the higher side, whereas the support is placed at around 22,740. Any move below that level will again attack some sort of a selling pressures, which might drag a Nifty towards 22,670 to 22,600 levels on the downsides. So view is bit cautious only, but we are likely to witness some sort of a bounce back rally, but we need to check it out whether such kind of a bounce back rally will be a short lived or not. So today's closing will play a very important role on the technical front. Coming towards the bank Nifty, 48,340 is the first resistance level. Above that level, 48,670, 49,000 can be tested on the higher side, whereas the support is placed at around 47,840 and 47,540 levels. So these are the supports and resistance levels for the bank Nifty. Try to chase the bounce back rally, but with the sweat stop losses. That's it from my end. I request Nirav to take a call forward.
Yeah, thank you, Swati. On the derivative front, see, importantly, open interest is quite high. A lot of shorts have been built in. This is a 5-year high open interest for Nifty, almost more than 2 crore shares for Nifty. PCR is at the oversold zone. VIX is high near the 18 levels. It will remain elevated as we are approaching the budget. So yeah, but the signs are there that some reversal in trade or some relief can come in. Importantly, Nifty has broken the 23,000 levels, and this level was a very strong support area for Nifty. And if you see the PCR at 23,000, it is still above one. That does suggest some sort of buying support will come in Nifty, at least for today. So we can see some buying coming in. Nifty can probably breach about 23,000 levels and move towards the 23,300, 23,500 levels in the coming time. So yeah, look out for the same. Support for Nifty is placed around 22,800 and 22,500 levels. If 22,800 is broken, you can see 22,500 coming in. From the stock specific front, we can see a broad base short covering rally today with the banking, autos, and others participating. So, yeah, almost everything should move up from current level. So, look out for the same. Yeah, that's it from my side. Like to ask the fundamental team to take over, please.
Good morning. On the result front, Epigreen Limited posted the result, and result was overall okay. Revenue grew by around 37% on a YY basis, and which was with a volume growth at 15%. Overall, EBITDA margin was flat sequentially at 28.3%. Volume growth was mainly led by various expansion projects which were commissioned in the last year, and the same will contribute to FY26 growth along with its chlorotoluene value chain project, which is under final stage and expect commissioning in the current quarter. So they will start with the trials, and the revenue generation is expected from the second half of FY26. The domestic demand for various chemicals is expected to rise in the future. And on the same path, the management has announced the expansion of CPVC resin and epichlorohydrin to double the capacity from the current level. Both these projects are expected to be commissioned in the first half of FY27, contributing to the growth from FY27 onwards. During the 9 months of FY25, it has repaid the debt worth rupees 380 crore. With this, it has improved its profitability for the quarter, and the PAT has reported at rupees 104 crore versus 49 crore in the same quarter last year. Overall capacity utilization stood at 82% versus 74% in the 9 month FY24. The company will continue to focus on the value-added import substitute products and the capacity expansion in line with the rise in demand. And it has guided for the EBITDA margin at around 25% over the near term. The stock is trading at a PE of 20 times to FY26 EPS, and we are positive on the company. Sumitomo Chemical India Limited posted the result broadly in line with expectations in terms of both revenue and profits. Revenue grew by around 18% on a YY basis. The growth was led by performance in both domestic and export market. In exports, Latin America posted robust growth, followed by Europe. Operating margin reported at 16.5%, which was in line with expectations. The stock is trading at a PE of 36 times to FY26 EPS, and we are positive on the company. Thank you.
Good morning. Coal India Limited posted their results. Results are above expectations. Offtake came at 194 metric ton, which has grown 17% quarter on quarter and 1.5% year on year. EBITDA per ton came at 633 crores versus the expectation of 586 crores, which has increased 22% quarter on quarter and 6.7% year on year. Revenue from operations has increased 16% quarter on quarter and has declined 1% year on year. EBITDA margin came at 34.4% versus the expectations of 32%. Adjusted PAT came at 8,505 CR. We will provide further updates after the con call. Tata Steel also posted their results. Results is above expectations. The delivery volumes for India came at 5.3 million tons versus the expectation of 5.3 million tons, which has grown 3.5% quarter on quarter and 8.4% year on year. Netherlands delivery volumes came at 1.5 million tons, which has increased 2% quarter on quarter and 18% year on year. UK delivery volumes came at 0.57 million tons, which has declined 9.5% quarter on quarter and 11% year on year. EBITDA per ton for India has increased 8% quarter on quarter but declined 16.4% year on year. The EBITDA per ton for Netherlands has reduced 100% both YOY and QOQ. And for UK as well, it has declined 50% for year on year and quarter on quarter. Revenue from operations came at 53,648 CR, surpassing the estimates of 52,550 CR, but reflecting a 3% decline year on year. EBITDA has declined by 4% quarter on quarter and 5.7% year on year. We will provide further updates after the con call for the same as well. Thank you.
Yeah, apart from this, Kaynes Technology reported lower than expected or decline, very low numbers. Share is trading at higher valuations, so we may see some corrections in the stock. The key reasons for the lower sales growth will be known in the call. The revenue grew by around 30% year on year, whereas the expectation was at 800 crores versus the company has reported 660 crores. EBITDA margin came a bit lower, but still manageable. at 14.2% versus expectation of 15%. We'll update post the phone call why the miss has come. Then uh, Uh, Varikesh Sugar came up with the numbers, and these numbers were stable, indicating that sugar company may report year-on-year stable set of numbers and may see some recovery in the next quarter. So that's all from us. Now I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So in today's session, we might witness some pullback in gold till 79,850, 79,900. Then again, some selling pressure is expected. So for trading purpose, one can initiate a sell with a stop loss of 80,000, 80,100. And on downside again, it is expected to test 79,500 to 300 levels on downside, wherein silver we are expecting prices to test 89,500, 89,000 on downside. So any pullback till 90,800, one can initiate a sell with a stop loss of 91,700. Whereas in metals, we are expecting copper prices to correct till um, 824, 822 in the February contract. So selling around 830 is recommended with a stop loss of 835. Whereas zinc, we are expecting prices to test 267, 266 on downside. So any pullback around 269.50, 270, one can initiate a sell with a stop loss of 272. And in crude oil, we are expecting prices to pull back till 6,400. So buying on dips around 63.20 is recommended with a strict stop loss of 62.50. And in natural gas, we can expect a pullback till 325, whereby one can initiate a sell with a stop loss of uh, 340. And on downside, it is expected to test 310, 300 on downside. So that's it from us. Thank you very much.